Hello, I'm Andreas Bange, and today we're going to look at the income statement, or in other words, profit and loss statement. And as you might remember, it has to do with our coconuts we had in the previous videos. So let's hop in and let's see. Also, income statement has a three-line heading, the name of the company, then what type of statement it is, and a period of time. The income statement always will start with the revenues from whatever your operating business is consisting of. From that, you are subtracting the expenses directly related to it to get the so-called gross profit. Now, these are not all operating expenses, so the remaining ones have to be subtracted from that, and we're getting the result from operating activities. As you recognize, only from operating. But what is now about the others? Well, those are taken care of in the so-called statement of retained earnings. It also has a three-line heading and shows the same period of time as the income statement. The statement of retained earnings always starts with the balance of the statement of retained earnings from the previous period. In our case, it is 0 because the Co-op Nutrition Company just started. Now we are adding our results from operating, which we figured out in the income statement. And from this subtotal, we now subtract and add all other expenses and income from the financing activities. Then we get the result before taxes. Taxes are assumed 20%. We subtract the taxes and we get the result before or after taxes from a continuous operation. Now, from continuous operation, it also can happen in some times, in some years, that you have other expenses such like discontinued or extraordinary. These we will talk about in a later video. And if we don't have anything like that, we don't need to add it. And at the end, we are getting our so-called net profit. So you see, net profit is revenues minus expenses. It is an equation, and it is the so-called income equation. But, question, what will we do with our profit now? Well, there are two possibilities. Either we give part of the profit back to the owners, so-called dividend, or we keep some of it in our company, which then is an internal financing and which will then be added to the retained earnings, which is a part of the equity and which will be shown in the balance sheet. Now, what we have is one form. We have the income statement and the statement of retained earnings. Very popular is also the list form. As you know, we have different forms. But as you see, we have the same figures here as we had in the other version. This form is preferred because it can be shown more detailed and it is easier to detect for analysts and for investors some figures in between, some ratios, which we will have a look at in a later video. Two I want to pick out. The EBIT, earnings before interest and taxes, is a very interesting indicator and shows you what does the company achieve by its operating activities. It is excluding different percentages for interest and different percentages for taxes. So a very interesting figure. Another one is the so-called EPS, earnings per share, and it shows you how efficient is the management using the equity to generate profit. Please don't mix it. This has nothing to do with the dividend. The higher the EPS is, the better it is. Okay, and that's it for today. Like it, share it, subscribe it. Looking forward to the next time. I say bye bye und auf Wiedersehen.